Risk management and trading is a topic that is probably beat to death more than anything else. Everybody has some secret formula of, every trade should be a 1-1 or a 1-2 or a 3-5 or a 5 out of 7 or a blah, 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 blah. And if you do it like this, then there's no way you lose money. Guys, I have a very specific approach to this that is actually going to help you. And it's going to help you really just cut through all of the BS that's out here on YouTube. Okay, my name is Forrest. I'm a real day trader. I've been day trading my own personal account, right? Prop firms have made day trading very, very popular again. It's fun to talk about, and there's people who come in with specific strategies really aimed at planning to fail, right? The whole idea is that if you just pass some of your accounts, you can get paid eventually. I think the best strategy is to trade for real, which means you need real risk management, right? Stop going in and thinking that just because the valuation is a couple bucks, or even if it's a couple $100, that it's okay to blow it up. Ultimately, your goal should be to take your profits from that prop firm, put them into your own account so that you can fund real trading and ultimately, possibly make a lot of money over time. I don't know what your goals are as a trader, but the tips that I give you in this video are really the way that I explain risk management is really going to help you on your way. One other thing, I'm doing a giveaway while I'm filming this Sunday. So I have 2 giveaways going on right now in my Discord community. So one for 3 50K expert My Funded Futures accounts. So you need to join the Discord. There's a channel called Raffle. Hit participate and you can join that raffle. I'm also going to do 3 starter accounts. So My Funded Futures just did a new rollout starter accounts. That video probably already dropped by the time I'm filming this. Yeah, explaining the new starter account. Pretty cool new account type in my opinion. They have a path for you to get to a live account, which is interesting. I'm gonna give 3 of those away as well. So a ton of stuff going on. You have to be a member of the Discord. Discord has a 7-day free trial, as well as we have 50% off right now if you use code 10K. So that's code 10K. When you sign up, we'll give you 50% off your first month. So a lot of stuff there, but I want to make sure you're aware of it. People are always asking for discounts, promotions, freebies, blah, 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 blah. If you win one of those accounts, you're definitely going to want to reference this video so you don't immediately blow it up, right? Don't go in high leverage and blow it up. So let's set the stage first. All right, risk management. Let's use something very conservative. Okay, maybe this is something that you're doing. This video is actually sparked by a conversation I had in our Discord. So if you're watching this, this is not, I'm not out to get you. Literally 99% of new traders do this. Okay, you're trading your index of choice or your ticker of choice. Doesn't matter what it is. I trade ES and NQ personally. You don't want to lose money, so you have a standard bracket order of 1 to 4. Okay, so you're going to risk 1. We'll say tick, it could be 1 point, 4 ticks or 4 points. Okay, the math checks out like this. So if you lose 3 trades in a row and then you win 1 trade, you will have made back your losses and be up 1 point. Okay, that's how it works. Or you could actually lose 4 trades, win 1, and you're flat. Okay, if you risk 1 to make 4. Okay, if you lose 4 trades in a row, risking 1, that means you've lost 4 points, right? Then the trade that you win, you make 4, okay? What does that actually do for you as a trader? Regardless of setup, you're basically saying, I'm always going to have this same bracket order, and it gives you this false impression that you're actually managing your risk well. The problem is when we look at outcomes, okay? People always talk about win rate as well. They talk about RR and win rate. And people tend to approach both completely in their own vacuum, which doesn't make sense, okay? There's also another metric, profit factor, which is really the only metric that really matters. And this example is going to give you why. Then we're actually going to dive into a chart here. I have NQ up on my iPad, and I'll show you exactly what I mean, how this won't work on a very strong trend day. So you enter every single trade with a 1-4 risk management. Your win rate on the day ends up being 0%. Okay, you have a limited number of trades, 5 trades. You go in every single trade, you get stopped out. Okay, you've lost 5 points because again, you have a 1-4. You lost 5 trades in a row. So you've only lost 5 points. You haven't lost a ton of money. You're not hurting, but you're scratching your head. And some of the trades actually went your way. They went in your favor, but you're super frustrated because your risk management was so tight and you feel like you're taking the proper approach to the market and you're not sure how to adjust it. So this is going to actually help you adjust and fix your risk relative to what the market is showing you. Let's take a look. So we're looking at NQ right now. I have Trading View up open on my tablet. This is just the app view. You can trade on this sometime. It's actually really nice. You know, what's interesting about trading on your iPad is it's much more tactile. It feels really good. Actually feels a lot better to trade with your hands, which you're always doing on a keyboard anyways, than otherwise. But let's use that same example, right? Risking 1 to make 4. We're on the 15-minute chart, and we can see here that we had a pretty strong trend. This is NQ on Friday, 15-minute, and I have the 8 EMA, the 8, 21, and the 50, right? So the 8 EMA is this blue line. We have the 21, which is this orange line, and then we have the 50, which is the red, okay? You can see here that we're bouncing off, you know, live off of this macro level. We can turn on the visible range, and you can see here that there's a low value node that we're bouncing back up into. Market literally just opened. I might do a little opening trades here soon, but we're not gonna talk about that right now. So what would happen if we go back in time on Friday, and I want to take a long here? We go back to, let's get rid of that. We go back to this candle here at 10 a.m. So 10 a.m., we can see that we bounced off of this blue line, right? And we've been holding this blue line basically throughout the entirety of Friday. We bounce, we bounce, we bounce, we bounce, right? The 8 EMA is very often the support line on trend days. Not just on the 15-minute, we could actually dive down to lower time frames. Okay, we can go to the 5-minute. We'll zoom back a little bit. And you can see that on the 5-minute, it gets held as support as well, and it actually dipped down into the 21 on the 5. So we use the 8 EMA on all time frames. On this trend day, the 15-minute 8 EMA ended up being the line in the sand. Sometimes it's the 5-minute 8 EMA that's the line in the sand. It was the 5-minute 21 and the 15-minute 8. A lot of information there, but go ahead and rewind if that doesn't make sense. The point is that there's some line that we want to take a long off of. So 10 a.m., we can go back to that candle, and we can see here on the 5-minute right around 10, there was this dip down right here, okay? Actually, let's just go back to the 15. We'll keep it simple. We'll keep it simple. And you can open this up on your own screen as well, guys. I actually highly recommend it. Okay. 15-minute chart. And we go to the morning. There's this dip down. Within the 15 minutes of the 10 a.m. candle, we come down to this blue line. If I have a really tight stop, we can actually see here that we touch the candle at 20,467, and it dips down below it to 20,462.25. 67 to 25. Okay, now I want you to imagine that you have a stop that's maybe only 3 points, right? You don't let it breathe even a little bit. You're gonna get stopped out of this trade, and you can see that the close of the very next candle was up here at 20,518.25. Okay, so entry 20,468.25. You could have taken profits, close of the next candle, or you could have just held, you know, in the trend day. It doesn't really matter in this case. The point is that your stop wasn't based off of the structure of the chart. Instead, your stop was based off of some fixed entry. If we stick to the 1 to 4, right, you risk 1 point here. You get out at 467 or 466. You don't need our Gmail notifications. And you miss all the upside, right, in what is obviously a good entry. Okay, let's say you do the same thing again up here, right? You come to this candle where my crosshair is right here, the 11 a.m. candle. You get in at 512, but it comes down to 509. You get wicked out. You do it again up here at the 1 o'clock candle. Get in at 582. It comes down to 579. You get wicked out again. So you can see how having a tight stop on its own isn't enough. So what you need to do, and I want you to write this down. Okay, I really want you to write this down, is where does my trade stop making sense? Okay, that is where you want to put your stop. If you're then saying, well, if I put my stop based off of where the trade doesn't make sense, I'll have to reduce my risk because maybe that stop is 15 points. Well, you need to reduce your risk. The problem that a lot of you are having as day traders is that you want to make your system work instead of using a working system. This is something that I run into as somebody who tries to teach people how to trade on a daily basis. People come to me, they say, hey, here is what I'm doing. Can you make this work? And I say, no, this system doesn't work. And people get frustrated and they ego and they really try to double down on their broken system instead of using a system that works. Using a 1 to 4 or a fixed RR setup is a failing system. I'm gonna tell you right now, the market does not care about your fixed risk. Okay, and one of the worst things that you can do is miss out on good large EV trades because your stop was too tight. Too tight is always relative to what the market is showing. Okay. okay, on this day, you would have constantly gotten stopped out of longs because of having risk management that is too tight. Another very similar situation, right? On a range day, we come down and let's look at this bounce that we did off of this LVN down here, okay? So I actually have a line here right now, but we can see, all right, so we can see that the market bounced off of this low here. There's this LVN pocket here, right? We can see where the cursor is on the macro volume profile. There's a shelf, bounces here. So if you would have taken a long off of just the prior POC right here, and you did not account for the macro, volume profile, or even just the fact that even though the POC is up here, that there's a shelf down here at 20,208, and you had your stop too tight because this is a POC bounce, really good trade. It's a trade we take all the time. Okay, I actually took this long. This was a long that I literally took. If you have your stop without accounting for the volume profile, and you just have a line in the sand, 10-point stop, you get smoked, okay? Because the distance from the POC was at 20,224. The dip came down to the bottom of the shelf, 205. 222, 224, 205. So let's call it 20 points. So if you longed at POC, you would need at least a 20-point stop, right? Probably 25 to let it breathe, at least to account for this shelf. Now, you're probably saying, Forrest, 25 points on NQ is crazy. Okay, well then trade MNQ. Like the answer is so obvious for a lot of you guys and right in front of your face. And I want it to be, this video is supposed to be this because that's what some of you really need, right? Some of you, again, I'll say it one more time. You want to trade NQ. You know that your stop needs to be 20 or 30 points, but then you scratch your head and you say, I don't think I can eat 20 or 30 points. What do I do? The answer is obvious. You reduce your risk, but you don't want to do that. Instead, you come to me and say, hey, Forrest, how can I not, trade MNQ? How can I still trade NQ and have a better? Well, there is no way. You either wait to get to the bottom of the shelf. Okay. You either wait to get to the bottom of the shelf here, or you long right at the signal, which is the point of control, and you account for the shelf. If you miss your entry, right, let's say that you don't get in on the shelf, then you have to wait for a confirmation. You're going to get in late, and that's fine, okay? Because after a POC bounce, it's probably going to sweep the high, so there's good EV either way. But you just have to manage your risk and manage your trade according to what the market shows. And that's the biggest problem. I think risk management, I know, talking to hundreds of traders at this point, this is the hardest thing for people to grasp is, the conflict in your mind between what you want to do, which is make big numbers and trade big tickers and feel good about it, right? Feel like you're a real trader versus doing the things that make sense. Okay. There's no rule that says that you have to trade NQ and you can't trade MNQ. And if you want to trade NQ, or if you want to trade NQ, you could just trade 10 MNQ, right? That's the same as trading 1 NQ, but you can scale in and out, which is exactly what I do. I trade MNQ most of the time, and I'll get in with 10 contracts, pay more commissions, but I can scale in and out of my trades with ease, right? It's literally a factor of 10. I can scale in and out by a factor of 10. It's great. It's awesome, right? It's more liquid than NQ as well. You should do it. I highly recommend doing it. So this video, and there's a million examples of why, but if you're somebody right now, this is the action item for you. And I want you to write this down as well. I want you to ask yourself, for the trades that I lost, why did they fail? Either one, your thesis was wrong entirely, okay? And that's fine. Your RR on that doesn't really matter, okay? But you could still be making the same mistake on those if your thesis is wrong, where 2, did the trade play out how I expected, but my risk was too tight, right? I had fixed risk. Did I account for, or really was my bracket order set up according to my thesis, okay? Did my stop and my take profit follow what I said was going to happen? You see this all the time. Go into the Discord, someone says, hey, I think the price is going to here. I'll be wrong if it goes to here. You look at the trade that they took, does not fit what they said at all. Okay. And there's a lot of reasons I can do that. Nerves, whatever, we trade live, right? And even I suffer from that sometimes, right? Mostly on the take profit side, I'll get out a little bit early, not get the last 20% of EV. That's something I have to work on. But certainly when you're getting in, and I've done this live a few times, you'll see me have my stop way down, like 20 or 30 points, but it's really not way down, right? Because the EV on the trade is like 80 or 100 points. So it makes sense. If you're not willing to risk 20 points to get 100 points, then you need to reduce your risk probably by a factor of 10. So that's really it for this video, guys. Very, very simple. Something that I wanted to talk about again. I've talked about it before, and I'll probably keep doing videos on this topic with different examples because it's so important and critical for you as a new trader to understand that managing your risk is really to drive one number and one number only, and that's your profit factor. RR is not a real number, Okay. If anybody says I traded with an RR, they're lying. It's BS. Okay. RR is not a real number. It's not something that matters. Win rate, not a real number. It's not something that matters. The only thing that matters is profit factor. Okay. And if you do the mental math in your head or just follow what I did, it makes perfect sense. Okay. If I have 10 trades, 9 of them get stopped out and one of them goes to 300 points. Okay. And the other 9 trades lost me 20. Guess what? My profit factor is humongous. Okay. The inverse is true, right? So don't care about your win rate. Don't care about your RR. They matter. Okay. There are levers within your system that you can pull to optimize your profit factor. But you need to be asking yourself, if I have an A setup, how do I get in my A setup and stay in it? How do I set my stop and my take profit so that I'm getting as many as my A setups as possible? Nothing else matters. Okay, it doesn't matter if you have a 32% win rate if your profit factor is 7. Okay, those are crazy numbers I'm throwing out for example, but that should make it very, very clear why chasing things like RR and stuff like that is a completely backwards way to trade. And you're going to keep banging your head against the wall, not able to figure out why your system's not working. In any case, subscribe to my channel, watch my other videos. Deuces.